All right, everybody, welcome. This is CyberBulls.
Tesla is the most consequential company in the world.
I'm just a bull on the EV business. I think the margins are going to explode.
Still the same company. Company is still executing.
The energy is bigger than the auto business.
I'm the young bull that talks a lot of smack.
All right, welcome everybody. As always, we are just so excited. This week was actually very exciting. A little scary on the weekend. We're going to talk about the China numbers that came out, which is good news for us. The CPI numbers that looked like it was good news. We definitely need to cover the banking turmoil and the Moody's role. We've got Alexandra and Jeff and Christian here, and they are very opinionated. They've got some real opinions about what's happening right now. We also want to cover what the recent bulls moves. Every one of us had done some little bit of moves. Some are buying gold, some are buying stocks, some are, we've got to ask each person what they ended up doing. And then there's going to be topics about how far ahead is Tesla compared to its competitors. The question I've been asking, the main topic we need to ask ourselves is, Tesla seems to be winning every which way that you can, and yet the stock doesn't seem to be moving. What will it take for the stock to finally start moving? Moving. So let's get started. Let's go with, we can't avoid it. This weekend, there was some crisis. Our little group, we were tweeting each other every single second of what was happening. There were some of us that was getting a little hysterical. Some of us were keeping calm. What was your opinion? Let's start with you, Christian. What was happening this weekend?
Yeah, it's always good for our weekly gathering. So yeah, let's get right into it. So it was a big weekend. We had some banks. SVB was the big one, Silicon Valley Bank. I'm sure everybody listening kind of knows a little bit about it. I'll just kind of touch on it. It was basically a bank failure run on the bank, and it was getting to the point where we were going to open Monday, and if we didn't have the federal government come in, essentially Yellen and Powell, and basically backstop that bank, it could have led to more problems, more bank runs, more chaos, which of course could have bled into the overall financial markets. Not only the financial sector, it could have bled up into the whole stock market because of the uncertainty of the whole matter and where it would go. But I thought the administration and the Fed kind of stepped in, and they did well. They did what they had to do. They did, in my opinion, an implicit backstop of pretty much every deposit in every FDIC bank. I think I didn't follow it super close today, but I don't think we're having any. There's little anecdotal stuff going on, but I think it's pretty much contained. The market is pretty much green. I think a lot of those regional banks are, flat, or maybe some are green, some are red, but essentially a lot of the bleeding has dulled down. So I think overall we're in a good spot. We had inflation CPI today. It came in right kind of what I thought. It was, lukewarm, right on 6%. Core was a little hot, but nothing too crazy. The trend is still going in the right direction, not as fast as everybody wants, but it's going in the right direction. And that was enough to just calm the markets and say, okay, inflation's not getting out of control. If the Fed goes, they could maybe do 25, but 50's off the table. Maybe they even do a pause. And that was enough for the market to kind of rally today and just, a sigh of breath. So yeah, good stuff.
Can I ask you, Jeff, you sent out this tweet earlier today. You said China weekly insurance data is beating expectation by 20% last night. The CPI came in 9. Investor Day was amazing. The IRA is flowing in North America. What's the near-term bear case again? Are you angry? What do you say?
Yeah, I think just asking kind of the questions, I think when you're kind of a bull or a bear in the stock, I always think you should kind of try to look at the other side of it to see if you're missing something. And we probably could be missing something. I think we're a couple of weeks away now from the P&D numbers, production and delivery for Q1, and one of the things that just continues to swirl around the name is just demand, and that's why I liked highlighting the Tesla China numbers last night. It's 1 week, it's 1 week and a quarter, it's 1 week and a year. If you're long the name, you're not kind of overreacting on 1 week here, 1 week there. But it's nice to see the strength. Basically, jumping up week over week, 20% higher than expectations, and really, actually, so the macro China auto market has been in a decline in Q1, and Tesla's actually grabbing share during that decline, and they're on pace to actually exceed their prior best quarter potentially. They can certainly meet it, but they're also starting to close that gap on the EV side with BYD, which is important as well. These pricing moves that Tesla makes. By the way, a lot of the Chinese EV makers have responded, but in that tier that Tesla plays in, they're still quite strong. So it's 1 week. I think we need to stitch a couple of them together to see if there's a trend forming. China's also reopening, and that momentum also has to kick in. So you have to think about, get into the psyche of people. And that's why when I connected everything back to like this recent banking crisis in Tesla, you have to think, what are people thinking about over the weekend? I bet you everybody Googled their bank and said, well, how big is my bank? And is it safe? And, did they Google other banks to say like, could I move money to it? They weren't thinking about, going to the Tesla.com order page and potentially ordering a car. It doesn't mean that people weren't ordering cars over the weekend. They were. I'm just saying, like, you could have a momentary flash of like, there's other priorities out there. Tesla took, some heat, obviously, on Monday with all this going on, and it dipped on that. With other stocks, there's not necessarily a flight. Tesla's not viewed as a flight to safety yet. So, but yeah, I think all in all, just trying to understand the potentially the bear side of it, and always kind of challenge ourselves.
Let's keep talking about the what happened at the banking turmoil. What was your thinking, Alexandra? What caused this?
Yeah,
To blame?
Well, what is caused? There's obviously Moody's to blame, but there's also obviously the bank to blame, because they did what they should not have done, meaning using the equivalent what they can invest of customers' deposit, meaning customers put money on their checking and savings account. Then the bank can either have an investment portfolio that is at the money priced, where every day they market it to market, or they hold it until maturity, and that means they don't have to price it. Now, with interest rates hiking in those banks, the number of, or the size of non-valued, usually kept until maturity bonds that the banks hold, and their real price, this gap became bigger and bigger. I posted a tweet of that on Monday. And so the particular case of SVB is really special in the sense that they went beyond everybody else's intelligence, and really, insult to our intelligence, went very far. But there were a couple of things in this whole story that really get to me. First of all, it should be an interesting story for all of us, because quite a lot of Tesla suppliers are also banking with SVB and with other banks of medium size, just because that's how American banks are structured. So I think we should just understand this is a subject we have to look at. Even if Tesla itself may not be banking with them, we still don't know that. We don't know who are the banks and what's the money. I mean, we do know what they did on the 31st of December, but we don't know what Tesla is doing on a day-to-day basis with their cash. The second thing is this mechanism that the Fed put in place. And I mean, I'm not very favorable of this administration, but I have to say they found a quick, good patch on Sunday. They found it late, but they found it on Sunday, which was lending, actually taking all these assets at their book value, at their 100% book value, which is obviously a present to the defaulting bank, and lending them the equivalent money so that the next morning the checking accounts and savings account on those banks, on those deposit clients, were made even. They had the normal access to their money. That was necessary. There is no doubt about it. Now, the problem is obviously, first of all, this 100. Second, this is actually a loan. So this is a 1-year loan at a little margin at the high rate. So those banks have to pay back that interest. And it's linked only to bonds that were on the portfolio on March the 12th. So this is not something ongoing. People had the feeling on Sunday night that, oh, this is it. This is quantitative easing. We're back to it. The Fed is just taking back everything and injecting money. That's not it. They put a clear stop to it. And it's actually probably not enough. So I expect still a couple of chapters coming in this banking crisis, just because, I mean, they needed a patch, they did it, but they tried to limit it, and I don't think this limit is going to hold. Now come the role of the rating agencies. First of all, the rating agencies should have seen this long ago. This is now for 5 quarters that this amount this gap between what those bonds should be valued and what they were really valued. This huge gap was visible in all banking financials, and they didn't act, so they were late. Then what they did is, beginning of March, they contacted SVB and said, look, we want to downgrade you. They were single A rated. Who does that? Who calls somebody where you see the fire and says, look, I think I see a fire. Shall we discuss? I mean, this is not what's happening. That's not what they're supposed to be doing. They're supposed to alert the market. That's what clients of Moody's pay Moody's for, so that they get that information timely. Instead of that, well, let's call them, we want to downgrade you. So they downgraded them in the end a week later from single A to CAA, meaning 8 notches down, just, from investment grade to one of the worst, junk grades, with negative outlook. But by then, obviously, everything was gone, and then the stock collapsed. So it was absolutely reckless how they dealt with it. And then what I just learned is it's even worse. Obviously, SVB, Silicon Valley, playing the game, was very highly ESG rated. So the European Union just came out that 951 mutual funds in Europe are invested in SVB. This is absolutely crazy. So we're having the other loop with the ESG play, which we know from GM. The bad actors, they know very well how to play these ESG ratings. And here it plays out again. I just can't believe it. I have the feeling that, everything comes back in circles, and we have the bad actors and we have these bad ESG ratings. And here we are in a market situation that's just absolutely crazy.
I think we do need to discuss Elon's tweet saying that he might want to buy SVB.
Oh, okay.
And then
SVB.
I want to ask you guys a question. Do you guys know if Tesla, you said Tesla suppliers are in banking with SVB, but didn't Tesla themselves or even Elon himself have money in there?
Jeff, you were talking about a couple of names that were on there, right?
And I mean, none of this has been confirmed, but there were a couple of names, at least one name on the Silicon side that had some amount of money flowing through. I think, this is what supply chain teams do. This is what financial and accounting arms do in these companies. They were probably in war rooms all weekend working through exposure to various banks and where, how does the money flow? How are they getting paid? How are they paying their suppliers? And, just a tremendous amount of work. Companies do this work year round. To basically, pressure test financial health of their suppliers. And this is a situation where you actually want to, pull that information out and accelerate it times 10 to get real-time answers. So yes, there probably were, some things of note or concern, but my guess is that the dollar values were small enough for them to just step in and be ready to help if needed. But again, the issue was, mostly averted, and they're in good shape.
And then, come on, guys. Elon's comment. Come on. Let it out.
I don't think he's serious. I think,
Whoa.
I thought it was a throwaway comment, but go ahead, Alexandra. Tell me I'm wrong. I don't know.
I actually think he's really, I really think he's going to try to make a Twitter bank, right? He was always talking about providing money market funds, providing all payment methods and all that. And there's one thing being just payment provider, because that you can do with a certain license that they applied for already a year ago, which actually takes a long time. That just made me think it's crazy that one is still not granted. But I mean, even besides that, they really, he really wants to make Twitter a payment platform. And so having a bank as a platform behind it, and I actually think having Silicon Valley Bank, which has a lot of, startup clients, that is Elon's crowd. That's where he, grew up and became the entrepreneur he is today. So I took it very seriously, but just somebody put in the comment that comment was deleted. Exactly. Thank you. We're so aligned, Herbert. It's just crazy. I was couldn't be perfect, more perfect.
Thank you, Mark.
So I don't know. So I don't know whether he deleted it or not, but I do believe he was strangely quiet over the weekend. Once he had made that comment, we know there were quite a lot of bids. Bloomberg was going on about that there were people bidding for it, but in the end, no buyer was found. Right? The only buyer they found was for £1. They got rid of the English subsidiary to HSBC, but the US, the US, exactly, that would give him the whole bank charter, that would give him all the licenses necessary to do it. I don't think it's completely off the table. I think the subject is avoided, and it's still possible. I just hope he gets it very cheap and he doesn't have to sell any Tesla for it.
Yeah, that makes sense.
I don't know why.
Yeah, go ahead, Jeff.
Oh, sorry. I'm sorry, Christian. I was just going to say, I don't know why, if you are interested in acquiring an entity or entering into a negotiation, why would you go on Twitter first and say that? Like, why would you express it? First off, I am not in the camp of someone who is, Elon, you should tweet this. You should not tweet that. You should tweet this. You should not. I'm just questioning, like, why would anybody do it? Or if it's Elon or if it's any one of us, like, why would you do that? If you're seriously negotiating for an entity, why would you express that interest? And then it just leads to a lot of bad things that people start questioning. Then you go quiet. So again, I'm not in this camp of like he should tweet that. I'm not in the camp of censoring what people tweet. But I can tell you that I clenched up.
It's not a good negotiate. It's not a good negotiating technique.
That's why I told you. Why would you play your hand like that? Yeah.
Yeah.
All right. So, I think I told you guys that I have myself a startup, and we had money in First Republic Bank. I had heard about this on Thursday. And so I did end up pulling some of my money. I had to leave some of it there just to continue the transactions, but I did pull out the money. I don't know if I did the right thing. I feel like I'm part of the bank run.
Yeah, I was gonna say,
did I do the right thing?
Was it above 250,000?
No, it was under 250, so I was pretty sure
you were protected. You were protected in any case, yes.
Yeah. But the other, I'm just going to throw out a comment here, and I don't know if this is real or not. Please don't go after me, but it's just in the back of my head. Silicon Valley Bank is a bank that's in Silicon Valley, funds a lot of, what is the 14th largest bank, funds a lot of the startups, of which I'm certain David Sachs, Jason Calacanis, all these people have money in there, or they're invested in these. They make a big deal about this. They go crazy about it because it's for their own and their startups benefit. I'm not saying that that's wrong, but they made a huge deal out of this because of that. So now they're being called as heroes. I am very much on board with what happened. The Fed had to come in and make sure that everybody was whole. I'm on board with that, but it just felt a little fishy that these guys went crazy with all caps and going psycho. I know you guys love all in.
You're right.
So
yeah, but
I know you guys love all in. Christian, go after me.
No, you're justified.
I understand what you're saying. I understand what you're saying.
Yeah, me too. And I don't know whether you've seen it yesterday. Vivek, the guy that goes so much after ESG, was having a real go with David Sachs on Twitter, and then they also went on Megyn Kelly's show. But the thing is, if you're a VC like David Sachs, like Jason, you invest in these startups. These startups put their cash, so these startups get the cash from their VCs, right? This is Sachs's money. These are, whoever else is. They have this cash. They put it on SVB's account and use it to pay payroll, to make their investments, to do all that. If suddenly this checking account gets down to 250,000 rather than having the millions on it, this money is a real loss. And this money is a real loss for the VC guys behind it. There is no doubt about it. That would have meant they would have had to refunnel money to them. But I mean, on a larger scale, I do believe there should be a difference between a shareholder of a company, between a bondholder of a company for which the rating agency should do their work, but they don't, and for checking and saving account holders, right? I mean, the problem is the $250,000 the right amount? That's an amount we came up during the grand financial crisis. So the question is that still the right amount? Should it be a different amount for businesses? Because for a business, having 250,000 of liquidity lying around, because what that really means is you have to constantly either buy treasury bills with them or money market funds or whatever, but you have to always make sure that your cash on the account is less. So who are going to be the big winners here? The big winners are going to be the bigger banks, because they will just, people will feel more secure, but even more so treasury bills and money market funds. And obviously money market funds means, people have to evaluate whether the money is secure there, because they also have to do something with their funds. So the big winners are probably going to be treasury bills by all this. But I grant to you, Herbert, it was a bit fishy because they had a clear interest. And I think they should have actually said, we have a clear interest. I mean, it doesn't minor their message. The message was a good message, but by being so not open about the fact that maybe 15 of their companies had money on it, it made it a whole lot smelly.
Yeah, I agree. I think David Sachs, who we've been talking about in Calcanis, I like David Sachs. I think he's very smart, and I think of course they were advocating for something that was near and dear to them. So that's fine. Yeah. So I agree with you, Alexandra. And we can't forget Bill Ackman. He did a long tweet. He was on Spaces. He was very. And I think he did disclose that he had some startup investments there. So he had an interest. Like a lot of these people, these billionaires, they don't just do things out of the goodness of their heart. Now, sometimes they do, but it seemed obvious there was some, strategic, in their mind. They're trying to do something. It's just not out of the goodness of the heart that they wanted everything to be made whole. But I think for the most part, most capitalists, people that want the system to function, capital markets, you probably, want that. The people that do not want that are the people that either are non-establishment folks, either they have a political agenda and they're trying to get in there, or, they don't like capitalism. But for the most part, anyone that's involved with financial markets, you want the government to step in. And this is the question that I always kind of battle with. We love free markets and we love all that kind of stuff. And it's always that quote, privatize the profits and nationalize the losses, right? That's always kind of in there. It seems like when something goes wrong, the rich and powerful, they can make the calls to who they need to make. And, usually they're going to take care of it. And that's fine because it also helps all Americans, right? Because all Americans need to feel safe. All Americans have to know that their money in the bank is safe. So it's a dual thing. It's just that the people that are elites and more wealthy benefit a little bit more because the average Joe doesn't have hundreds of millions of dollars in a bank account. So it sways to the elites. So that's the old debate, right? Like, how much should the government get involved if we're not pure capitalism, right? Because we have Social Security, we have Medicare, we have a lot of safety nets. So we have programs for the poor. So we're not a pure capitalistic society. We are capitalistic, but we have a lot of guardrails and we had a lot of safety nets also. But that's always the debate. How much government do you want in there and how much do you not? So that's why we have these debates when these kind of things go on.
Yeah, I want to jump in because I saw this comment by Richard. The real winners are the VCs. I don't think the real winners are the VC. I think the real winners, like I said earlier, are the big banks and the treasury bills and money market funds. But the non-losers are the VCs. The VCs had the most to lose here, like a lot, because they are the ones funding these companies that had all this cash on the SVB checking and savings accounts. And so they are the biggest non-losers in this case. And that's why they were so motivated about it.
Can I ask a question? So I'm trying to understand Tesla and its kind of position in a situation like right now, macro. So in one sense, you can look at Tesla saying, hey, it's now a big boy. It's making tremendous amount of cash. The balance sheet is very, very strong. And it's now a big market cap. But on the other hand, it got downgraded. People were freaking out because if there was a collapse of the banking system, then the credit lending to the auto buyers will go down. There was it Bradford that came out and said something like, if this continues, he's possibly thought that Tesla can go down to $50 a share because it's going to be rated just like an auto manufacturer during a major economic crisis, like financial crisis. How do you guys see this?
Yeah, I'll just go real quick. I don't think Tesla was in jeopardy of that. If there was a systemic crisis where it was like an 08, 09, or God forbid, a Great Depression scenario, all equities are going to be going down at 2 times sales, 5 times earning, whatever it is, if they have any earnings. So I think, I wasn't that worried, to be honest, Sunday night. I don't know when we were discussing, I was having fun. I thought the government would come in and they would kind of, step in there and hold it. So I don't know. I think it made good TV. It made good Twitter spaces, but I wasn't that worried. I thought they would take care of Silicon Valley, and they would make the statement, and that's what happened. And every day that there's not a bank failure, every day that we go on to another story, and this goes into the past, will be a day that more people calm down and volatility goes down because we get back to the old way. So I already feel like I'm not even worried about the bank. With the market rally today, I put a tweet out. I said, I think we have a banking crisis, but I'm overly, right now I'm feeling pretty bullish, right? I got the Fed, the banking crisis. Here's a theory. The banking crisis to me, even though it could have been a worse situation, it actually helped me with the Fed because I've been on the rant with the Fed. They're going and going and they're not stopping. This gives an excuse, I hope, that the Fed realizes that they broke something. And let's take a pause here and not continue to break things, right? You've gone a lot. You've raised a lot. The economy cannot take much more of this. And we need to kind of just let it play out. So I actually think this could help Powell give an excuse for them to say, hey, let's chill a little bit. So I actually, in a reverse way, I welcomed it.
I was saying pivot, and you guys are laughing at me. All of you guys are laughing.
Just think about.
We're laughing all Sunday, Herbert.
Just think about the optics of it, though. He was on the Hill last week,
right.
Tuesday and Wednesday, asked
his
by
opening.
dozens and dozens of Congress people regarding the health of banks and his approach on interest rates, and the fact that he may go higher. He may have to do a half point. This was literally Tuesday and Wednesday. He's being asked about banks and the health of banks. And he's like, everything we're seeing, like everything's good. And then literally within 48 hours, a top 40 bank closes. And then
top 20,
in another 24 hours or in the start the following week, Monday morning, they close another bank. And then we find out First Republic needed this huge infusion from JP Morgan, and we were literally on the precipice of a massive bank failure. And this was literally within hours of him assuring Congress. So what does that do to his credibility? What does this do to the credibility of the Fed? And Christian's been on this. He's been totally correct. I've been saying this as well. Does their ability to predict the direction of markets and key indicators is only as good as the tools that they use, and the tools that they use and the inputs to those tools are not requisite to like what the importance of the job that they have. If I state that correctly. And
you're polite. You're being polite.
Yeah, in 2021, the Fed dot plot said that there would be in November of 2021, to be precise, they said in 2022 there'd be no rate hikes in 2022, and then a month later in December of 2020 said, okay, we'll do probably 0.9%, above, but we'll be above zero, we'll be at 0.9% in 2022. Lo and behold, 2022 7 hikes, fastest in multiple decades. It just shows that their ability to predict and understand what's going on is very, very poor. And this race to increase rates is an extremely dangerous thing. And, and now we saw what happened last week. And as it relates to Tesla, Tesla investors obviously are concerned. People who buy things are concerned if banks aren't open and available to have access to their money. So it's kind of common sense for a bit. But I think it'll settle down, and Tesla's going to be about, what does this Q1 look like? What happened with the IRA in North America? What happened with the price cuts in China? And then what is their outlook for the remainder of the year? And then how's the Cybertruck? So I think it's going to really start to hopefully come down to a Tesla story. But I will tell you, the next week, you've got PPI, I think, in 2 days. You've got a bunch of other economic indicators this week, and then next week you've got the FOMC meeting.
Yeah, and just to put a button on Jeff with the Fed, and then we can move to different topics. Powell's pretty much had carte blanche, right? He gets up there every time and he talks about inflation and how I have to help people that can't afford things, so I have to do it. And yeah, he gets questioned, but he's pretty much had his way because inflation's been high. I think now the pivot, not the way you're talking about, Herbert, the other pivot is now reporters, now people that are going to question the Fed, they're going to question Powell a little more. Hey, didn't you just say everything was great? A couple days later, we almost have, bank failures. What are you guys doing? Are you so sure that we should keep rating? We're seeing a little bit more of that questioning of the Fed, which will get them a little bit on the defensive. So they just can't do what they want. And we got to fight inflation and we don't care about the economy. That has to stop, right? The economy and the flow of money and things of that nature has to also be taken into consideration now, not just inflation. It's a dual mandate, not a Uno mandate. So I just wanted to say that.
I agree. I agree with you completely on that, Christian. And the other thing is, this is now concerning their crowd, right? I mean, all these Fed people have been in the banking industry before. This is the industry they know. This is the industry they feel. And this is the industry they know when the fear comes up, they want to make sure it calms down very quickly. So I do believe if one industry can tell them enough, this is it. Because that's where they will listen. That's the language they're used to hearing. Herbert, give us another topic.
Yeah. Okay. Well, I mean, so
Throw it to us.
the main topic. Let's talk about the main topic today, which is, I've been seeing Tesla. I think you guys would agree with me that they continue to win. They continue to say good news, good news, good news. And so when I hear Jeff say just 2 minutes ago, he says, wait until Q1 numbers come out. Wait till Cybertruck number comes out. Then things will look better. But it's like we've been hearing good news after good news after good news. There is no market demand issue. The last time I think I heard something negative about Tesla was in January 3rd. And it was just because they missed the analyst estimate. They still hit record numbers across the board. And yet we are seeing good news across the board. And then we see the competitors struggling. Why then is the stock not kind of following along with this narrative? And I know I heard you. I can hear you. I can hear it, Christian. It's
Herbert
the macro,
wants that stock
right?
up bad.
I hear you. Which is you said that no amount of news from Tesla will make any difference if you're in a bad macro. So just explain to me why that is. I mean, is there another company that's doing better right now than Tesla?
So I want to hear what Alexandra and Jeff have to say, but I'll go real quick while it's on my head. So I said this before, but I'll say it maybe in a slightly different way. So Tesla is doing well, but in order to drive stock price, especially in this kind of a choppy environment, two things have to happen, in my opinion, in my humble opinion. Either the market has to discover something they haven't discovered and value it, or the company has to do something on the earnings that blows it away and they didn't understand what, something has to happen. So either on the earnings front or a discovery of a business, and that usually would be on an earnings call. Without that, essentially Tesla right now is a known quantity. We know they make electric vehicles, we know they're growing, and we know their margin. The story is kind of figured out. Yeah, so it'll go up, it'll go down, but essentially in order to break out, if you want to get to highs, I think with Tesla at this market cap, it has to be more than just an electrical vehicle company in the short term. Maybe in the long term, if they just keep making vehicles, yes, as they grow the earnings, then the stock price will follow over time. But that could take years.
Yeah.
But if you want something to happen in this interim, say in the next 6, 12, 24 months, something has to happen that the market doesn't know about. And that could be the energy business. That could be FSD getting really better and chatter getting really, really better and people see it and analysts take note. Something of that. Without that, you're just kind of in this trading range. Tesla already made its big run from the 50 billion market cap in 2019 to the almost $1.2 trillion market cap in whatever it was, or 21, 22. So it already had a huge move. So you need another type of thing. Yeah, the market. Yeah.
Yes,
No.
you're right. No, he's right, Herbert.
Wait, no, he's not. Is 170 the right price, Christian, today? It is
180.
not.
I think it's 180.
It's nowhere near the right price, and you're
so
accepting
if you look at
You're
it,
basically
Herbert,
saying
though,
it's right.
To be fair, the earnings for this year, we don't know if the analysts are right, but they did $4 in earnings last year. The estimates right now are around the same. Let's say they do a little better. Let's say they do 5 or even 6, just to make it simple. What kind of multiple are you going to throw on basically what the analysts and market think is basically an electric vehicle company, a very profitable one with great margins. what are you willing to pay for something that's growing their earnings, 20, 30, 40% year over year in a bad macro? I would say, maybe 50 times is a fair value.
Good.
So if you do
Exactly.
5 and you can do 50, that's 250.
Yes.
We're at 180. So
Yes.
I would say we're
Yes.
probably a little undervalued. I would say we're more fairly valued on that business. That's why I'm saying you need something else to get analysts excited. So, but I'd love to hear what Jeff and Alexandra have to say.
Good. I'm glad that you stick with your 50 PE ratio, because if you were, I
Yeah.
was just ready to
No, I think
pounce
50 is
if you
fair.
had changed it, because you've been saying 50 for
50,
6 months to
yeah.
8 months. Good. I agree with you there.
For its growth, for the growth of the earnings, 50 is fair. If they could do 4 to 5, that's 25% in earnings growth in this environment. So imagine when they get in a better environment. So I think if they could grow the earnings 25, 30% year over year, I think a 50 multiple is fair. That's like a peg of less than 2. So it's fine. Yeah.
I agree with all of Christian, except that I don't think it will take so long. I don't think it's like 12, 24 months. The Cybertruck launch date will be a major one. The groundbreaking in Mexico will be a major one. There are major events coming up which will help, finding something tangible, and it will reflect in earnings. There is no doubt about it. I think what we're really waiting for this time is we need obviously the delivery numbers beginning of April, because that is going to be major to see how these price cuts in different areas translated, and then the earnings call in the third week of April. I also think, I just want to warn everybody, there will be some, I said it before, I will say just again, there will be some ups and downs around the shareholder meeting May 16th. I think everything will go smoothly, but in the preparation of that, there will be lots of noise and unwanted volatility coming up. But once we're over that, I do believe the good news can actually come. And sure, there's a shiny object missing, right? There's a shiny object missing of now suddenly everybody upgrading Tesla because we have higher PE expectations, or because now suddenly, yes, the FSD or the Cybertruck are in the roads. Honestly, I don't think it's going to take longer than 6 months, and I am still very confident that we'll get back to 300 quicker than we believe.
Yes. Okay.
I agree with a lot of those comments from Alexandra and Christian. Add just a bit of, I think could be breaking news. GM is, the announcement was they're extending a shutdown in their Mexico plant. I never saw that announced. What was announced 2 weeks ago was the Fort Wayne, Indiana plant. And now it's Mexico. And the difference is the Fort Wayne plant was inventory. Now the Mexico shutdown is believed to be supply. And Mary Barr was just on Fox Countdown right before the bell to kind of like walk through it. And even the Liz Claim was just questioning it. And why am I bringing this up right now? The question is there an issue going on right now? The biggest auto manufacturer in North America has idled 2 of their plants. One of them, they say, is for inventory. One of them saying is for supply. But is there an issue right now where they've got to idle their plants? Is there something else going on? If you look at this connection with interest rates being through the roof, 10 to 14%, depending on your credit rating, upward. People are saying upwards of 20% for a car loan, depending on your credit rating. Is there something going on from a macro perspective that would, and obviously this is why Tesla lowered their prices. They want to take the total cost down to the consumer. But I just want to raise that point that's out there. And I think there's a lagging effect with this data, because GM did have their earnings end of January, beginning of February, and they actually raised the SAR for the year, the total available shipments they believe for the year. They think it's going to run hotter than 2022. So I think there's a lag in the data. I think something's going on. I think Tesla is doing better and most likely taking share. That P&D data is going to be important to understand that. But I honestly believe we're on this precipice, and brought up some of the points. Cybertruck, getting more of those out there, getting that into production, low volume production, maybe later in the summer. That would be very bullish. FSD, if it becomes something more substantial in terms of like this thing really, I can literally, let my grandma drive this thing hands-free and feel great about it. If there's a couple, like I think we're right on the precipice of something big. But I also think like we have to escape this macro, vacuum that's going on right now, which is kind of it is putting a damper on things, just to say the least.
If one of the auto manufacturers fails, is that going to be a catalyst for Tesla? We're hearing Lucid might be coming close. We heard that Rivian and Amazon, they're kind of like breaking up their agreement a little bit with exclusivity being removed. We're hearing issues with GM. We're hearing issues with Ford. What would it take, and who would have to go down or something significant before people would wake up and realize I'm going to start putting more money in Tesla, or it doesn't matter? It's not going to happen.
Well, there could be. I'll be really quick, and I'll because I spoke last, but I think there could be a two-step thing here. One is, more bad news comes out. Who knows? I mean, we're now getting into mid-March. What if Ford warns? What if GM warns? So anyway, if more bad news that gets out that says, hey, there could be something going on with auto, that could weigh on Tesla for a moment in time. But Tesla comes out and says, hey, look, like we're growing through this. We understand that, there's issues with the marginal consumer. We're actually growing through it.
So you just said bad news from other auto manufacturers is bad news for Tesla.
No, it's bad news for the auto sector.
Yeah. And it could momentarily weigh. And then if Tesla can come out and actually show stronger results, that second step, they could actually, separate themselves.
And let's be real. Let's be real. GM and Ford are not going to go bust, right? The taxpayer. I mean, we had all this discussion this weekend. Was this a bailout or not? It was not. Just I'm right. But GM and Ford would be bailouts. And I don't believe 1 second, especially in this administration, that there would be a risk of them going under. Now, Lucid is another question, but I don't think Lucid disappearing would make any difference to Tesla. Tesla is not in that market. This is not even a competitive product. It is what it is. Rivian is more interesting. I mean, I could imagine a situation where Tesla would take over Rivian if really it would, I'm not saying this is the most likely scenario, but it will never happen with Lucid, for sure not. But Rivian, I mean, it's a cute truck. There could be some synergies. Who knows? But in any case, none of those two would have any negative impact on Tesla. But I do agree with Jeff. You have to understand the big money allocators, they sometimes go by sectors. So all the car makers, including Tesla, are in consumer discretionary. If there is a problem with consumer discretionary because interest rates are too high or demand falls or whatever, the whole industry, including Tesla, has a bad moment, even though Tesla may be a winner and may then, show that they have better numbers and actually gaining market share. That will take time. It's not like as immediately you hear bad news from GM, you will see a positive impact in Tesla. That's just not how it works yet. It will work at one moment, but that's too early.
Yeah, I'll go real quick. So I think, Herbert, you make a great point, because I always think it from investor psychology. And if I was an investor, especially if I'm looking at the auto sector, if these companies are having major problems and Jeff's documenting them and they're putting out these releases and Tesla keeps doing record quarter, second quarter's a record quarter, people are going to wake up and say, wait a minute, I need to go with the winner here. They are killing it. Their margins are still hanging in there. They're making profits and they dominate this market. I need to allocate funds there, right? GM might go on. Like I think that will happen. It might be slow, like Jeff and Alexandra said, but I think that could be a slight catalyst to the stock, because I know the way I would think. And if I was looking at the automotive sector and I see all this trouble and I see Tesla still putting up record quarters and delivering, record profits, I'm going to allocate capital there. So I could see it being a catalyst. Yeah.
I just want to. Excuse me, sorry about that, Herbert. I just want to show that. I love this one. New catalyst, a new Musk baby.
You took that over from this one, from Xander? Christian just
I did. Go ahead.
That's the more important point. Yes, Christian made a good. Yes.
I didn't want to show that.
Okay, so you guys got to teach me again. Teach me. Okay, because institutional firms have been buying. Alexandra, give us an update on on ARK Invest, continuing to buy. They've been buying over that. And then you just said, Christian, this, the retail psychology. I'm trying to understand, as always, which matters more, retail or institutional. But the retail, but I just can't, for the life of me, understand why nobody can see, not nobody, but a huge group of people can't see how Tesla is dominating and about to win everything. Is it because of hatred of Elon? Is it because of just, thinking that the competition is coming, that ignorance of gas versus EVs, and the competition is so powerful that they'll just wipe this startup up? What is going on? Tell me what's going on.
Well, you're right that institutionals are buying, and we're getting close to 50% institutionals now. Obviously, there are the precursors of this world, which are the ARKs of this world. They're having in the ARKQ now more than 13%. In Arcade, a big fund, they have more than 10%. And every time the stock dips a little bit, which allows them to go under the 10%, they add a little bit, because their rule is that once it's above 10%, they can't add. They can just let it run until they want to trim it again. So they are really still actively adding. And in the little one, ARKW, they're close to 7% now. But they're a good example of the actively managed ETFs that have, a positive attitude towards Tesla. Now, those are a small subsections. The big investors are the index funds, and they're just, following the index. That's it. Once they've bought their quantity of Tesla, since they're index tracking, they're not going to change. So the whole investor day was addressing other people, meaning the actively managed funds that have diversified funds, but that do really their jobs, the Fidelities of this world, not the ETF managers, but the ones that do an active allocation. And these people need time. So they've been at Investor Day, they're watching the stock, they're talking to the Gary Blacks of this world, getting more insight, whatever. And then at one day, they will allocate. But this is something that you can't time, and it's not coming in one bulk. So institutional investors always take time. And then the reporting obviously is lagging as well, because we only have those quarterly reportings for those funds. So we can only always anticipate. Next one will be mid-April now. What happened to these investors, and then we'll know more. But I do see it increasing quarter after quarter, just not as much as we wish we would. But you have to understand, they have to allocate all over the industries. They have to allocate, and EVs. Although we see it, and for us it's the center of our attention, it's just not the center of attention for everybody yet.
Yeah, I agree. So, and this is just anecdotal. I saw someone, a Tesla, YouTuber, and he does this every once in a while. He does, good stuff. I think it's Dylan from Electrified. He always talks about he has friends, and he says, he's all into it. Like, they don't know about Tesla stock. If one person says, "Oh, I own a little Tesla," but they can't do this, so he's looking around his universe. And he's the only one that he does it for a living. It's like that sees the potential, and all his friends, they're young, they don't get it yet. So that's the opportunity, though, too, right? When people, even people you think that should understand the Tesla story or be excited about it, are not. Like, once Tesla starts moving again, these people might come in and hear, "Oh, what's going on? What's the hot thing?" And add, they're retail, so there's not going to be a lot of money, but you get that momentum again. But to Jeff's point, and I think the main thing is, it is macro, right? We're in an environment where no one, it rallies and then it gets cut off, right? We're not able to get a sustained rally. And I brought this up yesterday. And this is a general market, right? In the last 20 to 25 years, we had the COVID crash, right? The Fed backstopped it. We got stimulus. We're off to the races. If you go back to 18, they're raising. Finally, Trump keeps berating them. They stop. We go off to the races. The 08, 09 crash. The Fed steps in eventually. It took a while. It was a long process. You get the $700 billion stimulus from Obama. We finally come out of it. We go off to the races. So if you want a multi-year bull market run where stocks go green for year after year and you get these nice hefty returns, you need the Fed at your back, not as your enemy. And until we get that turn where the Fed becomes more of our friend and supportive of markets rather than against markets, it's going to be very hard to break out of this cycle. So I don't know, for what it's worth.
So we had Ross Gerber on last week with
Painful.
Gary Black. and it was wonderful. I enjoyed it. You guys felt it was painful. So Grace asked the question, or replying to Eric, Gerber is a stealth bear. We've been hearing him. Apparently, tell us what's happening, Alexandra. With what has Ross been saying on TV the last few days?
Yeah, well, I think he was on Benzinga again this morning, and he was just going on about Tesla is wonderful, but Elon is the problem. Elon is the problem. Elon should talk less. Elon should do this. Elon should do that. And Jesus, I mean, the problem I have with him, and I said it last week, is I feel he is so annoyed with Elon being active on Twitter that just rules his daily mood, right? If Elon gives a couple of tweet replies to what he considers his political opponents, Ross gets wrapped up and then throws it all out there. It gets tiring. I think it's not productive. It's actually not even productive to him, because if he does it to get attention for GK, I can tell him I have friends who are clients in GK and they're considering withdrawing their money. They just think this is it. They don't want an emotional fund manager. They want somebody who stays clear. And they feel actually that he's doing what he criticizes Elon of doing, meaning he's just giving his opinion all the time on things that are not relevant to his fund investors. So it's a bit surprising. I hate that it's getting so political. I just wonder what's going to happen in next year and a half when we're back to presidential elections, because I mean, this mood, I really wish we don't have to do that. One thing that Elon does, what he does, I don't care about. I'm very happy that Elon feels he has free speech, but I just think as a Tesla Twitter community and support, we don't have to do all this commentating.
Yeah, just take the name out of the discussion. I think when you hear bulls and bears speak on TV, when emotion enters in, and it's hard to be on TV and not have an emotional point. Otherwise, you're if you don't kind of have some sort of extreme position, they're probably not going to call you back as much. So that's some people's shtick. Other people's shtick is I come on, I spout information, I'm very fact-based, and that's why I think I'm getting called back. But some people, have just, it's their personality. It's very eccentric. So Ross aside or other names, when I hear bears and bulls discuss Tesla, especially on TV, I really try to separate the emotional comments versus the fact-based comments. And really trying to understand, does the emotion override, things that are just, especially with the bears, because there's some very, very smart bears out there, actually, to be honest. And because they get things right on other names, and all of a sudden they get to Tesla, and I'm like, well, why are they getting it wrong? What's the, why are they getting it? Why can't they see this? And sometimes, some of their short positions have this long history, or they may have a personal run-in with Elon or whatever. And when that personal or emotional aspect enters into investing, it's true for really all of us. You have to be careful, and you have to be able to filter the emotional comments and just the fact-based comments. And I find that happening a lot these days.
Yeah, and I'll just go real quick. And we had Ross on, and I asked him point blank, so that's why I'm okay. I already talked about it with him. I said, how do you keep this as your number one position? You have a lot of the stock, and you're very unhappy with the leader of the company. I said that must be hard. And he seemed to say no, but okay. But if I own a stock and it's my number one position and I want it to do well, I don't think I would be getting up every day, kind of talking bad about the leader of the company. You could say you're an activist, but at some point, doing that on Twitter, is it really having an impact on anybody buying and selling the stock? You think Elon's listening to you on Twitter and he's going to say, oh, Ross said not to do it, I guess I shouldn't? I don't know how that way is going to do anything by just kind of showing your emotional
I have an
dislike.
answer to that.
Yeah, I would love to hear it.
I have an answer to that, because what really happens, I mean, all these girls and guys, including Katie Wood, need TV presence, right? That is their major mean of acquiring new clients. And you get TV presence because you get into a category. Let's take it away from the fund manager. Gordon Johnson What do you think his label is? Tesla bear. If he would suddenly stop doing analysis on Tesla, he would not go on CNBC anymore. If Ross suddenly wouldn't have Tesla in his top positions anymore, he would not be there anymore.
Yeah,
And
exactly.
that's
Yeah,
it.
that's a
So
good
that's
point.
the
Yeah.
price.
Mhm.
That's the
Yeah.
price to pay. So
Yeah.
and I just think that's hypocrite. I'm sorry. And I mean, I know I told him, but that is how it works. They want to be seen as the Tesla fund manager, whatever, because that's what gives them the airtime.
Oh, Alex, Xander, why are you not here? Instead texting away.
Try.
Fine. So, okay, listen.
Yeah, but there's a
Probably yoga
difference,
shop.
Alexandra. Just hit me. You very rarely see Kathy Wood say anything about Elon. You never see Ron Barron say. Now, I'm
Right.
just saying, like, they accept the investment, right? This is part of the deal, right? Yeah, I could maybe do some things,
Spot on.
but this is a different way of doing it. So yeah, but I totally get your point.
And they do it,
100%.
and
Yeah.
they do it completely differently. They do
Right.
it completely different because in that law case a couple of weeks ago, one of the Ron Barron emails to Elon leaked, and he gave him 5 good advices of how to stay out of the mess. I mean, obviously Elon didn't consider any of the 5, but you see that Ron will never go to CNBC or to Yahoo Finance or whatever and badmouth Elon like Ross does. He will do it discreetly in the back and send him an email and say, look, that's what you should do. And then if he doesn't do it, he doesn't do it. And he still considers his investment theory valid. That's where I have really a beef with Ross. And I mean, he knows. I just think that, be consistent. If you have a problem with Elon, well, then their IR managers, Martin, whatever, tell them, and then that's it. But if you go do a roadshow on how to lecture Elon, that's not the way to do it. That's just not, you actually feed the bears. You give them arguments.
So I'm a bull, and we are called CyberBulls. And so we're very much in favor of Tesla. And then people are saying, hey, you should bring a bear on. And absolutely, very open to that. The problem is that there are bears like, let's say, Gordon Johnson. Is he worth bringing on when things he says, when some bears come out there and they say something completely just disconnected to reality, that they can't even talk reality? That's the hard part. Then you have people that are bullish who have negative opinions. And that's why I don't mind having Ross Gerber on. And not that he's actually a bear. It's so funny. He was a ultra bold. Now he's become a slight bear. Now we're all turning on him. But that's the kind of person we need to be talking about. People who are not so bullish about Tesla.
Well, please,
but can actually,
but not,
okay.
but not Gordon Johnson. I mean, the
No,
thing is,
that's what I'm saying. That's what I'm saying.
I mean, there may be some intelligent bears out there. I mean, again, but they're so emotional, all of them. I mean, I tried initially to really, discuss things with them, be on Twitter, engaged with them, whatever. It always ended with a screaming match. I don't see it.
Yeah. Fair enough. And I just want to say real quick though, Herbert, like no one's turning on Ross. Like Ross is fine. Like he's a fun guy. I like the interaction. He's entitled to his opinion. We could comment. He can comment where he disagrees with us. That's great. That's the back and forth, right? But Ross is entitled to what he wants to say, and Gary Black's entitled to what they say, and we're entitled to what we want to say. So as long as it's done in respect, and I think we're making valid points, and they might make valid points back. So I think that is healthy. I think the Gordon Johnson thing, to Alexandra's point, is a little, he uses let's say this. He uses statements that are, you could, I guess, morph it into some type of truth, but they have no relevance. They only did 20 cars in Sweden. Maybe they didn't export to Sweden that month. So it's cherry picking data to win a debate rather than actually getting down into it and say, hey, are they not growing automobile deliveries quarter after quarter after quarter? Does it matter if 8 went to Sweden and 2 went to, Ottawa? It doesn't matter. So that's where I think Gordon Johnson gets messed up. And I would love a bear on. So if you could find one, yeah.
What about the other way? Like, I'm very curious what each of your opinions are, because we are seeing certain Tesla bulls just, completely turn against other bulls, but on the other side, which is do not say anything negative about Elon. This is the greatest company in the world. You guys have lost your conviction. You don't deserve to be on TV if you're giving air to people who are saying negative things. I see myself as a reporter, kind of like sitting in the middle, trying to ask the question. But even me just asking a question, I get some people saying, how dare you ask that question? There's those people that are just really on the far, I don't know. I'm not going to say one
Yeah.
way.
I want to know
Who
what
knows
Jeff
what
says,
side
but
they're
I'll,
on?
I'll just comment because that hit
Yeah.
me too. I disagree with that. Like, if you're a shareholder and there's something about the company that you invest in that you think is going to do great things, and there's some things that you don't like, I don't think there's any problem, respectfully and articulately saying what your piece is, right? And if it goes nowhere, so be it, right? Even if you're a retail investor, if you want to get something off your chest, you should be able to express that. And I don't think that makes you any less a Tesla bull or any less that you don't, like Elon. It has nothing to do with that. It's what you're trying to do the best that you can for your investment, and you want your investment to do well. And if you see things that are getting in the way of the investment doing well, I think anybody is okay to bring it up. That's where But what I will say is, if you are a bull in the stock, I don't think you should get up every day and bash it. That doesn't make sense to me, like from a common sense perspective.
Yeah, I was just adding to that. I mean, that's what makes a market. And if you basically carve out only the good things, you only include good things, you leave out things that you're concerned about. It really just destroys the credibility of the conversation. I don't know another way to say it. And it's almost like not worth having. Like, why would we be on this show if we just agreed with everything everyone said and we had just had the same views, and we had to carve out the views that were that could be negative or construed negative? You wouldn't really have anything. You'd just be agreeing, like, yeah, we agree Tesla's great every week. So yeah, it just doesn't lend to a credible, intelligent, like fact-based discussion. I don't think any of us on this show are interested in that. We're interested in talking about the issues in their fullness. So I think if you're concerned, and this is where I think, opinions about, for example, like Elon should talk to certain people and not talk to other people. I'm not interested in that, actually, to be honest with you, because I honestly don't think that is weighing on the long-term, stock price and the trajectory of the company.
Exactly.
And I also think if you're wrong on some of these things and these aspersions you're casting, you should actually come out and say, like, hey, I thought this. Like, for example, I thought he was a part-time CEO, which I didn't think that, by the way, but I thought he was a part-time CEO. And then you come out and he's literally has the best vision, not only for an auto company, but for an energy for the world. And that was put on display in March. And then what else do you expect a leader to do? You expect a leader to build a strong team. Well, who has a stronger team in the EV or auto industry than the team we saw on display in March? So the things that a CEO is supposed to do, he's literally knocking it out of the park. Now, can you necessarily agree with like every word is spoken, because the guy's very public about what he says? No, if you agree with everything someone says, that's more cultish than you'd probably want to admit. That's all I'll say.
Yeah, no, I agree with you. And I would like to add to that. I think we should really question from time to time our investment thesis, right? I mean, I'm 56. This is going to be my retirement. I don't want to just be there here for the next 10 years and think, okay, that's it. I've bought my Tesla shares and that's it. At the moment, I have no problem at all validating my thesis. The thing is, sometimes I have to calm myself down, because from short-term disturbances, I can get quite annoyed, right? Something makes a point, and then I think, like, oh my God, all this noise, why this, why that? That's really not necessary. So that's the one thing I want to really help others as well, making sure that we don't exaggerate small short-term noise, because it's just not necessary to blow this always up and make so much out of it. My angle is more, as you all know, governance and rating agencies and how this all fits in. And when I can bring that, and when I think I see value, I want to bring that to the table. But it is clearly the case that even when in governance or in rating aspects there is something negative, you have some of those super bulls out there that start screaming. You have no idea, even though the problem is real, right? And I mean, governance is not a subject where you can have black and white. It just doesn't work like that. It's a gray zone where you have to be the best of yourself. And you have some of those people out there that are unbelievably critical of anybody that says anything negative or critical about Tesla. And I think that's just wrong. We have to learn to discuss it calmly. We can all agree to disagree. There's no problem about it, but we should hear each other out.
How how much influence, or does it matter for people like us and YouTubers and people on Twitter can influence? Because you heard about SVP, and then David Sachs comes out and Jason Calacanis goes, if the banking crisis happens because of a YouTuber coming out saying something, that just should not have happened. But like when people attack each other, they're actually probably overinflating how much influence. Or do you think that there's a lot of influence that people can have? I mean, how big is this market, right? I always kind of think that the Tesla Twitter community, I'm guessing it might be 50,000 at the max. But then the vast majority of people are kind of like just, never on Twitter. They might watch YouTube. They kind of just peripherally, they're the people that could be influenced. But I'm not sure that, we are actually going to do it in significant
I don't think we are. I don't think Twitter really can, unless it's something coming from Elon directly. I think where more you get the narrative, because where does the big money watch? They watch CNBC. They see the headlines coming over, Bloomberg terminals. So I think if you get a headline or CNBC does a certain story, you might get a blip in the stock. That can move it because a lot of people have these things on as they're trading and doing things. So I don't know. I could be wrong, but I don't think anyone, even someone, has millions of dollars, they're not going to move the stock, right? You need a big wave of something, and that's usually either a headline or something dramatic that everybody sees at once that'll move it. So I don't think a Twitter handle is going to move it unless it's Elon's or someone like us. Like, we're not going to move it.
I will say that you can, if somebody says negative information, that's misinformation, we can shut it down quickly by being able to, like, community notes or us coming in and explaining the actual scenario.
Yes.
Then it does not become this spread, mainstream media, legacy media gets out there. That's I think part of what we do.
Yeah, and I think the FUD fighting is actually much more our role than the encouraging people to buy or encouraging people to take a certain stance. I don't think that's what it is. We're helping people to understand the basis of Tesla. We're trying to help people understand the market, as complicated as it is. But we're certainly more here to clear up FUD than to actively steer people into anything. I don't see that at all.
Yeah, I don't think we're a Twitter handle here or there moving markets. And I agree with Alexandra and Christian's points about correcting FUD and information. But I will tell you, a lot of these on-air folks that talk about the name on these financial networks, they are on Twitter. They're active. They're scanning the comments. They're looking for kind of top hits. They're looking for sentiment on the name, and they are reading. And actually, they are having interactions with some of us too. So they are getting information. They're probably also getting corrected as well. And many of the analysts as well are also, not all of them, but some of them are actually on Twitter and connected too. So it's not. I agree. It's not. We're not moving it one way or another. I think we are correcting bad information, and I do think some of the analysts and some of the people that talk about the name on TV are active and they're actually reading the comments or reading some of the posts.
And you had some interaction.
Better informed.
Yeah, and you had some interactions, right? 2-3 weeks ago. I remember with one of the CNBC guys.
Yeah, multiple times actually. So it's they're starting to, I think it's just, if there's a method of interacting with them, sometimes you can excite them by some of the things you say, and sometimes it's just purely like a good fact-based discussion and an exchange. But yeah, sometimes, there's definitely interactions happening.
Yeah.
One day, all three of you guys will be on CNBC. It's going to happen.
And you'll be our agent.
I'm the agent. I'm making it happen. Yeah. Let's answer some questions from the audience here. And so let's start with, so Neuroprofessional asked this question, right? Which is, thank you so much, Neuroprofessional. Appreciate this. So it's a question about the hybrid robotaxi. So we're actually hearing the FSD version 11.3 is it's sounding good, right? I just interviewed Chuck Cook. He says the build is very solid. He sees that it's made huge improvements, still making some mistakes, but it's a step change forward. Now, with robotaxi, and the question here is like, can you do a hybrid, right? Autonomous robotaxi, but also maybe a supervised robotaxi. What are you guys thinking about supervised robotaxi? Is that even something that Tesla would even consider? Like, kind of sounds like a halfway step.
Well, it's probably the easiest step to start getting in the authorities on board, right? If you get FSD approved as a robotaxi model, saying there is a supervising driver, that's probably the easiest way of getting approval for it. Don't even know whether you would need approval for it, because obviously today there are quite a lot of Uber drivers using FSD when they drive their clients.
I think the
Yeah.
economics work really well, hybrid robotaxi or not. Just driving people in a Tesla that you charge with electricity. That maybe if you don't have enough money to own a Tesla, you can go rent one, drive people, and then receive money, for rideshare. There's a model. I think it's going to start in very small stages and then move to larger fleets. Don't look past like these major Hertz deals and maybe potentially other big fleet deals in the future. And that's where the robotaxi piece could start. FSD has got to improve. Well, we're getting some select data, maybe a handful, a few dozen cars have been upgraded with this latest bill. We have to see it kind of across a broader swath of cars, but the performance has to improve. But I think it could start with these fleets.
Yeah. I'm interviewing Scott Walter today, and he's an expert and robot expert. And he's saying that supervised robots, Tesla bot, is very likely going to happen. And they're already doing it with other companies. And this is where somebody can put on AR glasses, and they're seeing exactly what the robot's doing, and then they can control the movement. In the same way, it could be very similar to supervised robotaxi, where somebody's driving the car. Other manufacturers are doing something similar to that. And then Xander was asking about thoughts on GPT-4. Well, guess what, Xander? I actually had this all set up and ready to go. Have you guys seen this?
Oh, I did. That was ARK Invest, right? That was Brett.
Yeah, we need to show this. This is very, very important. I know some people are thinking, this is not Tesla. Well, okay, I think it is. So let's talk about it. GPT-4 is released today, and look how crazy improvement in just how many, a month? So this is the green. GPT-4 is the green, and its ability to pass these exams. So we're talking about the LSAT and the SAT. Wow. Look at the LSAT; they're now at 90%. Okay, MCAT, the AP Physics. This is all these different kind of categories of tests. And they're just kicking butt. Okay, that's how good.
For my industry, this is going to be something. I'm in immigration. And currently we work on a file, on a green card file, about 6 months, because it's a lot of work to do a good green card file. I'm talking for entrepreneurs. We're in a very specific niche. If once ChatGPT is at the level we want this to be, this is going to kill so many jobs. It's incredible, and make it so much quicker and easier.
Yeah. So the reason I bring this up is because that is AI, and Tesla is working on, it's working on real world AI, which is the ability to recognize real world, that's vision. And that's what FSD is based on. So if this is the improvement of GPT-4, which is, the ability to just, you can't even tell the difference between knowledge, right? And so it's very possible that we'll see Tesla do the same thing, the acceleration of growth in its abilities. So
I just make a quick comment. Mary Bauer was out this afternoon talking about integrating AI in their gas-powered vehicles. And again, it was kind of this like Frankenstein, like hobbled solution of like, well, we're going to go, put this client in the car, and then who knows how it's going to work. It's kind of like how a lot of the auto solutions have come about today. They're kind of all stitched together. It's not continuous. And by the way, if you're talking about investment thesis in Tesla, what other auto brand is kind of has their own operating system running in the car, and something that they're building for something globally? Just think about that for a minute and where that could go. But in terms of AI in the vehicle, Tesla is doing real world AI right now with FSD. I believe that they are going to extend that to a client in the car that can do real things to basically reduce error and reduce input into the vehicle. That's how they'll use AI in the vehicle, is to reduce error and to reduce input.
People forget that Elon co-founded OpenAI, which is the founder and the creator of GPT-4. He's upset that they initially, with the idea was it's supposed to be nonprofit, so that companies like Facebook or Google or Microsoft can't own this powerful technology. And yet now OpenAI is starting to be a for-profit company. I think it upset Elon
Microsoft
so
has it, right,
much.
Herbert? They're the ones that kind of have, right?
Microsoft ended up buying,
right.
well, investing heavily.
Licensing.
And then so now Elon is a little upset. So he started talking about he's going to create Truth AI, which is going to be a competitor to GPT-4. Now, at this point, I think we believe that Truth AI is going to be part of Twitter, but hopefully all of his companies help each other, and maybe Truth AI will be helping to power the voice activation, that the control of the Tesla, and you being able to ask questions within the Tesla. It's almost certain that it's going to happen. It's mind-blowing. It's happening right in front of our
AI
eyes.
is definitely coming over the next 3, 5, 10 years. I mean, that this could be another game changer, like similar to the internet. It's a big theme. So
I think one session we'll have to talk about what this does to jobs, because I've been thinking about this, and I can't get to any good solution, because this is really going to destroy so many jobs. It's I don't know how civilization will adapt to this.
What I'm worried about is not only jobs. Initially, the answer was, well, nobody has to work anymore. Now you can be creative. You can do videos. You can do poems and books. Well, no, these guys can do that better than us also. So why bother? But I am saying now to myself is make as much money as possible with Tesla. Make as much money. Now, Tesla is going to ride this wave. So yes, it's going to destroy jobs. But if I can make money from the stock rise of Tesla, then at least I'll have something and I don't have to be worried about losing my day job. You know what I mean? So that's
Herbert, very pragmatic. I want my money, all the rest, what the heck?
I want my money. I'm gonna make a lot of money.
Remember though, as these things come, governments might get involved, and how governments like to protect jobs. So there'll be some of that pushback. Yes, there will be huge disruption, but I don't think everything will go at once. They'll step in and they'll try to massage this one and that one.
That's it.
Yeah, but a lot of the creative stuff might be a major dislocation there. Yeah.
And like I said, robots don't vote. Robots don't vote. Wait.
End of the day, let's recap again. I mean, I'm just personally very, very happy and relaxed that I own Tesla stock. I think that we're in robots, we are in AI, we are doing, electric vehicles, we're in energy. I mean, these are the big batteries. Yeah. And the other thing that they talked about in Investor Day was the ability to create that battery to be so much smaller and not using minerals. And the motors, I mean. So now you're reducing the battery size, you're reducing the motor size. That could fit into the leaf blower. It could fit into anything, you know what I mean? Like you could put it into a robot, you could put it into any form factor. So anyways, I'm just glad that I'm invested in that. Okay. Thank you everybody for doing this. Please, if you think that you felt you got a little bit brighter with the CyberBulls today, please give us a like, give us a subscribe. I really appreciate that. And take a look at my new outro, guys. Thanks, everybody.